Hi everyone. I just wanted to give you a quick presentation on a vocabulary lesson. I mentioned in my earlier screencast the term expenditure, and I said that that is a new term for you guys. It is one that is used not exclusively in, but extensively in governmental accounting. It does have a broader definition. It can be used in a regular commercial sense. It just isn't much. It is mentioned in regard to capital spending, but let's take a look at the difference real quick here. So first, what is an expense? An expense is reported on the income statement in the period in which the cost matches the related sales. It's an expiration or a using up of an asset. So the simple way to do this would be, simple way to think about this would be an advertising expense, or the cost of goods sold, or salary expense, or we'll get into an example where we're going to take a look at the purchase of a major asset and the difference between expense and expenditure in relation to the purchase of a major asset. So essentially, there's no future value. It's been used up. So that's the idea of an expense. It's an income statement item. It helps us to measure net income. And it matches, again, with the matching principle, we match our costs to the related sales within the accounting period. So examples of expenses include cost of goods that were sold during a current period. Also, anything that occurred during the period: salaries earned by company's employees, interest expense that was incurred, commissions earned by sales representatives, rent and utilities for a retail store, and many others. As many items on the income statement that show up as expenses, they're all valid expenses. So let's go to question number 2. What is an expenditure? An expenditure is a payment or disbursement. Okay, plain and simple. The expenditure may be for the purchase of an asset, a reduction of a liability, a distribution to owners, or it could be payment in the same accounting period as the amount becomes an expense. So, not all expenditures are expenses. So that's the key there. So when you see an expenditure, not all expenditures will be expenses. So examples of expenditures that will not be an expense in the accounting period in which the payments are made include the purchase of land for a future expansion. And then another example would be the principal portion of a monthly loan payment. Remember, that reduces the liability. So from a financial accounting perspective, in commercial accounting, the repayment of principal is not recognized as an expense. It's an outlay of cash, so we have a reduction to cash, and at the same time we have a reduction in the liability. But from an expenditure point of view, an expenditure took place because it was a payment or a disbursement of cash that was made. So I'm hoping you kind of get the difference between expense and expenditure there. So let's take a look at how to distinguish them. So a company makes an expenditure of $255,500 to purchase equipment. The expenditure occurs on a single day, and the equipment is immediately placed in service. Assuming the equipment will be used for 7 years, the asset's cost could be reported on the income statement as depreciation expense of $100 per day for the next 2,555 days, assuming 7 years of use. So the expense is the depreciation. So we depreciate it $100 per day. That's the expense. The expenditure was the initial one-time disbursement or payment of $255,500. And that also should help explain why expenditure is spoken of with regard to funds and not at the government-wide level. Remember, the government-wide level is more like the commercial financial statements you're used to seeing. So the statement of activities really is going to look at kind of revenues minus expenses. Whereas at the fund level, where we're looking at the current flows of resources, both in and out, we're looking at that single payment, that single $255,500 check that was written, or the cash payment that was made. So full accrual, we worry about depreciation expense and the allocation of depreciation expense over time, so that accumulated depreciation. From the expenditure point of view, we're looking at that one single cash payment. And that's why oftentimes the simplest way to think about the difference between expense and expenditure often involves the purchase of a capital asset. Okay, but it can involve more than that. But typically expenditure is a one-shot deal, and expense can occur multiple times over time. So hopefully that helps you out a little bit, and that's it for this lesson. Thanks.